During our global manufacturing footprint expansion plans, we continue to forecast a long-term gross margin of 53% and higher is achievable. Next, let me talk about our 2025 capital budget and allocation. Every year, our CapEx is spent in anticipation of the growth that will follow in the future years, and our CapEx and capacity planning is based on the long-term market demand profile. At TSMC, a higher level of capital expenditures is always correlated with higher growth opportunities in the following years. In 2024, we spent $29.8 billion as we continue to invest to support our customers' growth. With our strong technology leadership and differentiation, we are well positioned to capture the multi-year structural demand from the industry megatrends of 5G, AI, and HPC. In 2025, we expect our capital budget to be between $38 and $42 billion as we invest to capture the future growth. Out of the $38 to $42 billion CapEx for 2025, about 70% of the capital budget will be allocated for advanced process technologies. About 10 to 20% will be spent for specialty technologies, and about 10 to 20% will be spent for advanced packaging, testing, mask making, and others. Our depreciation expense is expected to increase by high single-digit % year over year in 2025, as newly incurred depreciation will be partially offset by other nodes rolling depreciation. Even as we invest for the future growth with this level of CapEx spending in 2025, we remain committed to delivering profitable growth to our shareholders. We also remain committed to a sustainable and steadily increased cash dividend per share on both and quarterly basis. Now, let me turn the microphone over to CC.
Thank you, Wendell. Good afternoon, everyone. First, let me start with conclusion of 2024 and our 2025 outlook. 2024 was a mixed year of recovery for the global semiconductor industry. AI-related demand was strong, while other applications saw only a very mild recovery, as macroeconomic conditions weigh on consumer sentiment and end market demand. Concluding 2024, the Foundry 2.0 industry, which we define as all logical wafer manufacturing, packaging, testing, mask making, and others, increased 6% year over year, slightly lower than our previous forecast. Supported by strong demand for our leading-edge process technologies, TSMC's revenue increased 30% year over year in US dollar terms, outperforming the foundry industry growth. Entering 2025, we expect fabless semiconductor inventory to have returned to a healthier level exceeding 2024. We forecast the Foundry 2.0 industry to grow 10% year over year in 2025, supported by robust AI-related demand and a mild recovery in other end market segments. Supported by our technology leadership and broad customer base, we are confident we can continue to outperform the industry growth. We expect 2025 to be another strong year for TSMC and forecast our full-year revenue to increase by close to mid-20% in US dollar terms. Now I will talk about AI demand and TSMC's long-term growth outlook. We observe robust AI-related demand from our customers throughout 2024. Revenue from AI accelerators, which we now define as AI GPU, AI ASICs, and HBM controller for AI training and inference in the data center accounted for close to mid-teens % of our total revenue in 2024. Even after more than tripling in 2024, we forecast our revenue from AI accelerator to double in 2025 as the strong AI-related demand continues. As a key enabler of AI applications, the value of our technology platform is increasing as customers rely on TSMC to provide the most advanced process and packaging technologies at scale in the most efficient and cost-effective way. To address the structural increase in the long-term market demand profile, TSMC is working closely with our customer to plan our capacity and investing in leading-edge specialty and advanced packaging technologies to support their growth. As we have said before, TSMC employs a disciplined and thorough capacity planning system to evaluate and judge the market demand to determine the appropriate capacity to build. This is especially important when we have such high forecasted demand from AI-related business. At the same time, we are to earn a sustainable and healthy return that enables us to continue to invest to support our customers' growth while delivering profitable growth for our shareholders. Underpinned by our technology leadership and customer base, we now forecast the revenue growth from AI accelerators to approach a mid-40% CAGR for the 5-year period, starting off the already higher base of 2024. We expect AI accelerators to be the strongest driver of our HPC platform growth and the largest contributor in terms of our overall incremental revenue growth in the next several years. Looking ahead, as the world's most reliable and effective capacity provider, TSMC is playing a critical and integral role in the global semiconductor industry. With our technology leadership, manufacturing excellence, and customer trust, we are well positioned to address the growth from the industry megatrend of 5G, AI, and HPC with our differentiated technologies. For the 5-year period starting from 2024, we expect our long-term revenue growth to approach a 20% CAGR in US dollar terms, fueled by all 4 of our growth platforms, which are smartphone, HPC, IoT, and automotive. Next, let me talk about our global manufacturing footprint update. All our overseas decisions are based on our customers' needs, as they value some geographic flexibilities and a necessary level of government support. This is also to maximize the value for our shareholders. In the U.S., we have a long-standing good relationship with the U.S. government, dating back to even before our Arizona Fab project announcement in May 2020. We have received a strong commitment and support from the U.S. customers and the U.S. federal, state, and city government, and are making substantial progress. Building on the successful result of our earlier engineering wafer production, we were able to pull ahead the production schedule of our first fab in Arizona. Our first fab has already entered the high-volume production in 4Q24, utilizing N4 process technology with a yield comparable to our fabs in Taiwan. We expect a smooth ramp-up process, and with our strong manufacturing capability and execution, we are confident to deliver the same level of manufacturing quality and reliability from our fab in Arizona as from our fab in Taiwan. Our plans for second fab and third fab in Arizona are also on track. These fabs will utilize even more advanced technologies such as N3, N2, and A16 based on our customers' needs. Thus, TSMC will continue to play a critical and integral role in enabling our customers' success, while remaining a key partner in enabling of the U.S. semiconductor industry. Next, in Japan, thanks to the strong support from the Japan Central, Prefecture, and local government, our progress is also very good. Our first specialty technology fab in Kumamoto has started volume production at the end of 2024 with very good yield. Construction of our second fab, specialty fab, is scheduled to begin this year. In Europe, we have received strong commitment from the European Commission and the German federal, state, and city government. We are progressing smoothly with our plans to build a specialty technology fab in Dresden, Germany, focusing on automotive and industrial applications. In Taiwan, we continue to receive support from Taiwan government, and we are investing in and expanding our advanced technology and packaging capacities. Given the robust multi-year demand for our 3-nanometer technology, we continue to expand our 3-nanometer capacity in Tainan Science Park. We are also preparing for multiple phases of 2-nanometer fabs in both Hsinchu and Kaohsiung Science Park to support the strong structural demand from our customers. We are also expanding our advanced packaging facilities across several locations in Taiwan. As we have said before, under today's fragmented globalization environment, overseas fab costs are higher for everyone, including TSMC and all other semiconductor manufacturers. We are leveraging our fundamental competitive advantage of manufacturing technology leadership and large-scale manufacturing base to be the most efficient and cost-effective manufacturer in the region that we operate, while supporting our customers' growth. Finally, I will talk about the N2 and the A16 introduction. Our 2-nanometer and A16 technologies lead the industry in addressing the insatiable need for energy-efficient computing, and almost all the innovators are working with TSMC. We expect the number of the new tape-out for 2-nanometer technology in the first 2 years to be higher than both 3-nanometer and 5-nanometer in their first 2 years, fueled by both smartphone and HPC applications. N2 will deliver full node performance and power benefit with 10 to 15 speed improvement at the same power, or 20 to 30% power improvement at the same speed, and more than 15% chip density increase as compared with the N3E. N2 is well on track for volume production in second half of 2025 as scheduled, with a ramp profile similar to N3. With our strategy of continuous enhancement, we also introduced N2P as an extension of N2 family. N2P features further performance and power benefit on top of N2. N2P will support both smartphone and HPC applications, and volume production is scheduled for second half 2026. We will also introduce A16 featuring Super Power Rail, or SPR, as separate offering. TSMC's SPR is an innovative, best-in-class backside power delivery solution that is first in the industry to incorporate a novel backside metal scheme that preserves the gate density and device with flexibility to maximize the product benefit. Compared with the N2P, A16 provides a further 8 to 10% speed improvement at the same power, or 15 to 20% power improvement at the same speed, and additional 7 to 10% chip density gain. A16 is the best suitable for specific HPC product with a complex signal route and dense power delivery network. Volume production is scheduled for second half 2026. We believe N2, N2P, A16, and its derivative will further extend our technology leadership position and enable TSMC to capture the growth opportunity well into the future. This concludes our key message. Thank you for your attention.
Thank you, CC. This concludes our prepared statements. Before we begin the Q&A session, I would like to remind everybody to please limit your questions to 2 at a time to allow all the participants an opportunity to ask their questions. Questions will be taken from both the floor and from the call. Should you wish to raise your question in Chinese, I will translate it to English before our management answers your question. For those of you on the call, if you would like to ask a question, please press the star then 1 on your telephone keypad now. If at any time you would like to remove yourself from the questioning queue, please press star 2. Now we will begin the Q&A session. We'll take the first few questions here from the floor and then go to online. I think maybe left, middle, right. So why don't we start? I think first question, Gokul Hariharan from JP Morgan.
Thanks, Jeff. Happy New Year, management team. My first question is on the TSMC's U.S. future strategy. There has been a lot of changes recently. Taiwan relaxed the N-1 restriction. There was a news about that a week back. CC, you met Elon Musk as well recently, so you said there are a lot of developments that you've discussed. Your key IDM competitor seems to be struggling as well, while your Arizona fab seems to be ramping up quite well. So in light of all these, I just wanted to understand the longer-term strategy. Would you consider investing in latest node in the US? Because so far it has been N-1. Now you don't have the restriction from the Taiwan government to go and invest in the latest node. What has been your feedback in whatever discussions you have had with the incoming President Trump administration? Because they have talked a lot about CHIPS Act and everything, but they're also supportive. Your original investment was during President Trump's first term. And lastly, I think, Wendell, last time you had mentioned you're not very keen on taking over any IDM fabs. Has that thinking changed, especially given TSMC has the potential to become an even more stronger partner for the US in terms of bringing up US local manufacturing? Sorry, long question.
Yes. Okay. Thank you, Gokul. Indeed, a very long question. I think Gokul's question is looking at TSMC and our strategies in terms of global expansion, particularly in the US. He notes that Taiwan has recently relaxed or said they relaxed the N-1 rule, and CC has met many of our large customers in the US. And our Arizona fab is ramping quite well. So his question really is on the longer-term strategy, I believe 3 parts. Number 1, what is the feedback or sort of discussions ongoing with the next administration in the US? Secondly, would we consider taking over IDM's fabs? Has that thinking changed? And last, on the new node. Maybe we'll go one by one.
I almost forgot your question already. Okay, first one, the technology node. Actually, it's not we don't want to ramp up the same technology as in Taiwan. But if you look at the when we ramping up, introduce a new technology into manufacturing, the fab, the process is so complicated, so it has to be very close to the R&D people. So the initial phase of the ramping up always come from the fab close to R&D. So in that sense, we want to ramp up the same kind of technology in U.S., but that practically is a little bit difficult. So Taiwan will always be first. Does that answer your question? It's not because of N or N-1 limitation. No, it's practically we just have to ramp up a new node in Taiwan.
Okay.
And the second, do we change our strategy to expand faster or something? Again, this is we always say that we build the capacity overseas is due to customers' need. If my customer has a very high demand, what should I do? I build more fab, right? With the necessary government support, by the way. Okay, talking about the government, let me assure you that we have a very frank and open communication with the current government and with the future one also. I cannot say anything more than that. Okay. What is
IDM fab?
That's my customer. And now that we, again, our strategy is not based on my IDM competitors' status. They are our very good customers. I like them, and they are very important to TSMC's business also. That's all I can say. Thank you.
Okay. Thanks, C.C. Maybe my next question going to gross margins. So Wendell, we are almost approaching 60% gross margin. Last cycle, we peaked at about 60% towards the peak of the cycle. You're expecting the cycle to even strengthen based on guidance that CC provided for both AI as well as some improvement in non-AI. So how should we think about gross margins in this cycle? Is it realistic that we can get to more than 60% gross margin in this upcycle? And related to that, could you help us understand the US, or especially the US fab, overseas fabs, but especially US fab dilution? What are the key factors there? Because as you mentioned, yield is already approaching or almost close to Taiwan yield. So is it basically cycle time is longer, or is it that some other costs are much higher in the US fab? Because new fab depreciation is probably fairly similar compared to the Taiwan fab.
Okay, so Gokul's second question is on gross margin. Again, two parts. He notes gross margin is almost approaching 60%. In 2022, the last cycle, it was also around this type of level. We have said that this year is another very strong growth year for TSMC. So his question is, how should we think about gross margins in this current cycle? Can we approach or get to 60 or low 60s type of again? And then the second part is more specific to the U.S. In terms of the cost gap. What are the U.S. cost factors leading to the dilution impact?
Okay, Gokul, first question on the gross margin. As we said, there are 6 factors affecting the profitability. Every year, different factors play different roles. But for example, if the utilization is extremely high, like the last cycle, it is not impossible for us to reach what you just said. And secondly, the U.S. fab cost. It is more expensive in the U.S., mainly because of several reasons. Number one, the smaller scale. Right. Now, number two, the higher price in the supply chain. And number three, the very early stage of the ecosystem. So if you add all these up, as we said, 2 to 3% dilution from our overseas fabs every year in the next 5 years.
If I use the 2 to 3% and do some math, it feels like the overseas fab is starting at, 10% gross margin or 5% gross margin. Just adding up factors. Obviously, it's not how it works, but I'm just doing outside in. Is that right? Is that the right kind of ballpark in terms of thinking about margin?
All we can share is the 2 to 3%. Yeah.
I don't think TSMC has ever started a fab at 10% gross margin. Thank you.
Goku, we are working hard to improve it.
Okay, thank you, Gokul. We'll go to the middle. Laura Chen from Citibank.
Thank you, and congratulations for the good result. I just want to have more details about your view. I mean, I think people are kind of looking for your updated long-term CAGR growth. So I believe that 20% starting from a already very high base in 2024 is a really good long-term objective. But just wondering that aside from the strong AI demand, what's your view on the traditional applications like a PC and the smartphone growth, in particular for this year?
Okay, so Laura's first question is looking, she notes that we have updated our long-term CAGR to be approaching 20%, revenue growth in US dollars, starting off even the high base of 24. So her question is, of course, AI demand is part of that, but what about smartphone and PC? And I think your question is specific to this year, CC, 2025.
This year is still a mild growth for PC and smartphone, but everything is AI related. All right. So you can start to see why we have confidence to give you a close to 20% CAGR in the next 5 years. AI. You look at a smartphone, they will put the AI functionality inside. And not only that, so the silicon content will be increased. In addition to that, actually the replacement cycle will be shortened. And also they need to go into the very advanced technology. Because of, if you want to put a lot of functionality inside a small chip, you need a much more advanced technology to put those kinds of things. Put all together, that even smartphone, the unit growth is almost low single digit, but then the silicon and the replacement cycle and the technology migration that give us more growth than just a unit growth. Similar reason for PC.
So we can kind of expect those AI capable edge devices, they were all based on 2 nanometer next year, perhaps second half.
Leading edge technology.
Okay.
That's what I say.
Okay, thank you. And also my next question is about AI. I noted that these times you include the HBM controller into your AI business revenues definition. So can you provide us more update about what the HBI baseline business opportunities could be? And previously TSMC kind of announced cooperation with the key memories suppliers globally. Can you give us more details or updates on what the progress of this business engagement?
Okay, thank you, Laura. So Laura's second question is on HBM controllers. She notes that our definition of AI accelerators includes memory controllers or HBM controllers. So her question is, how do we see this opportunity, or what is the opportunity for TSMC, and what is the progress of this working with our memory partners?
We are working with all the memory suppliers, all of them. And that is because of TSMC's logic chip or logic technology more advanced, and that means our customers' requirement. So all of them are working with TSMC. Now we start to see some of the product coming out, but the high volume probably you need to wait for another half of 1 year to see the high volume and big contribution to TSMC's revenue.
Okay, thank you. We'll move to this side of the room. I guess we have Charlie Chan from Morgan Stanley.
Hi, CC, Wendell, and Jeff. First of all, Happy New Year. I think it's going to be a very exciting year given your bullish outlook and also lots of news going on, right? So let me start with overnight. The U.S. seems to put a new framework on researching China's AI business, right? So I'm wondering whether that will create some business impact on your China business and how to manage this. autonomous driving chip, do you think it count as cloud AI? And would TSMC be able to continue to service your China customers?
Okay, thank you, Charlie. So Charlie's first question, if I may sort of extrapolate or summarize, is about the announcements of different types of U.S. export restrictions this week pertaining to China and AI-related chips. So his question is, what is the impact to TSMC? How does it impact our business?
So far, we don't have all analysis yet, but the first look is not significant, it's manageable. So that meaning that my customers who are being restricted or something, we are applying for the special permit for them, and we believe that we have a confidence that they will get some permission so long as they are not in the AI area. Okay. Especially automotive industry, or even you talk about crypto mining. Yeah.
Super helpful. And my second question is actually very hot recent as well, the CPO. I think your main partner, Jensen, Taiwan, this time probably besides meeting you, right, probably also want to handle this supply chain. So based on your recent technology symposium, right, you already get ready for your approval to pay up to in June. But do you think the Taiwan supply chain can really facilitate this CPO? Because without this key component, the next generation Rubin schedule could have some issues. So I think this is part of the first part of the question about how you're going to facilitate this secure supply chain. And secondly, to TSMC, your foundry service, right? Do you see significant upside with the optical networking migrate to CPO? Because I ask this because some conventional product like optical transceiver, DSP, could be replaced. Thank you.
Well, Charlie's second question is a very specific topic. He wants to know, well, if I can generalize, because we certainly don't comment on customers or their products, but in terms of our progress on silicon photonics and CPO, how are we working with customers? How are we preparing as part of our advanced packaging solutions? And what are the opportunities for TSMC as optical moves to silicon photonics and other type of solutions on a general basis?
Charlie, that's a very technical question, Silicon photonics, we are working on it, as you said, and we got a good result also. However, a big volume, I don't think it will be in this year, or probably we have to wait for 1 or 1.5 years to you can see that the contribution of the volume production. The initial results are quite good, no doubt about it, and so my customers are quite happy.
Okay, thank you, CC. Operator, we'll now move to the questions online. We'll take the first call from the online participant, please.
Yes. First question, Brett Simpson, Arete Research.
Yes, thanks very much. And can I just say congratulations on reaching 100 billion in annual sales in Q4. It's quite a milestone. So my first question is on Arizona. I think, Wendell, you mentioned that we need to see some higher scale. So can you update us on the status of phase 2? It looks like the construction of the shell is nearly complete, but it would be great to understand more about how you see P2 developing over the course of 2025. And in terms of pricing U.S. wafers, how are you planning to do this? Will you have a U.S. price and a Taiwan price, or are you more likely to have a global price regardless of where you make the wafers? Thank you.
Okay, so Brett's first question is on Arizona, maybe split into two parts. First is in terms of, we have already started the volume production of the first fab, so Brett would like an update on the progress of the second fab in terms of the construction of the buildings and the shells, etc. And then the second part would be on the pricing of overseas. As we say, there's value to our customers. He wants to know, do we charge a separate price or is it part of the overall pricing, et cetera, et cetera?
Let me answer the second question first. Do we charge a little bit higher? Yes, we did, because of we have a value of geographic flexibility, right? And you guys know that made in USA is a premium product. Yes, we discuss with our customer, and they are all agree and happy to work with TSMC so that we can, because of the cost structure over there, so it's a little bit higher price over there. The progress of the first fab is right now in volume production. Second fab, we almost finished all the building and start to put the facility, et cetera, and we expect that we move the tools this year also. And we have a plan that our third fab probably will start very soon, and we will announce it in the later days. Okay.
Okay, thank you, CC. Brett, does that answer your first question, and do you have a second one?
Yeah, very clear. And the second question, I wanted to get your perspective. Broadcom CEO recently laid out a large SAM for AI hyperscalers building out custom silicon. I think he was talking about 1 million accelerator clusters from each of the customers he has in the next 2 or 3 years. What's TSMC's perspective on all this? I'm sure you've spent a lot of time verifying what hyperscalers are planning over the years to come, and how comfortable are you with the scale of what's being implied here? Thanks.
Okay, so Brett's second question is looking at AI. I guess, specifically AI custom chips or ASICs. He notes that one of our customers recently laid out a very strong or large addressable SAM market for AI hyperscalers using custom silicon. Lots of them talking about clusters of 1 million chips. So he wants to know, what is TSMC's view? How do we see this trend in terms of AI ASICs as part of the AI demand megatrend?
Brett, I'm not going to answer the question of the specific number, but let me assure you that whether it's an ASIC or it's a graphic, they all need a very leading edge technology, and they're all working with TSMC. Okay. So, and the second one is the demand real, or is as a number that my customer said? I would say that the demand is very strong. That enough to answer your question? Brett?
Yeah, that's great. Thank you.
Okay, thank you, Brett. Operator, do we have anyone else on the line? It seems not. Then
no, we don't.
Okay, we don't. Then let's go back to the floor. I think on the left side, Bruce Lu from Goldman Sachs.
Hi. Thank you for taking my question. To be honest, I'm a bit surprised that the long-term gross margin target doesn't really change it. I believe TSMC's value is definitely more than selling the, pass on the cost. I believe that TSMC need to invest a lot more in R&D to maintain the leadership. TSMC suggested a raise the gross margin target in 2022 with higher R&D requirement, with higher profitable target, right? So I asked the same question 2 quarters ago, which is in the process of, price negotiation, which is understandable. But I think the price negotiation is pretty much done. What's the discrepancy here? Why TSMC cannot raise the, profitability target?
Okay, so Bruce's first question, he wants to know, again, our long-term gross margin. Why are we not changing the target of 53 and higher? Okay, he correctly notes that certainly TSMC's value is increasing, and certainly TSMC, we need to invest a lot of money in R&D and capacity to support our customers' growth. So we have always had a focus on earning the right return. He also notes in 2022, well, our gross margin used to be about 50, then we raised it to 53 and higher. So his question is, why is it not and higher, I guess?
Hey, Bruce. As we said, 6 factors affecting the profitability. Every year, different factors have different weight. Now, 2 things to note. Number 1, starting from this year, overseas fab expansion, 2 to 3 percentage point impact every year for the next 5 years. The other things to note, macro environment, uncertainty, which may lead to impacting the global economy, which may lead to end market demand. Now, having said that, we are in a capital-intensive industry, so we will need to earn a healthy return to continue to invest, to support our customer, support their growth, and also deliver a profitable growth to our shareholders. And you mentioned about the raising of long-term gross margins back in 2022 to 53% and higher. And we have been able to deliver that and higher part since then. So given all the above, we continue to think that 53% and higher gross margin is achievable, and we work very hard to achieve on the higher part.
Okay, I'll try next 2 quarters. For the CoWoS capacity, TSMC has been very aggressive in expanding the capacity. However, the application is highly concentrated in AI at the current stage, which there are certain noise around it. When can we see non-AI application, such as server, smartphone, or anything else, can be can start to adapt CoWoS capacity in case there is any fluctuation in the AI demand?
Okay, thank you, Bruce. So Bruce's second question is on CoWoS capacity. In his words, we have been very aggressive to expand the capacity, but his concern is highly concentrated with AI-related demand. So his question is, when do we expect or to see more non-AI application adoption of CoWoS solutions?
Well, yes, today is all AI focused, and we have a very tight capacity and cannot even meet customers' need. But whether other products will adopt this kind of a CoWoS approach, they will. It's coming, and we know that it's coming. So that's all I can say.
When?
It's coming.
Okay, I'll try next quarter.
On the CPU and on the server chip, let me give you a hint.
Thank you.
Okay, thank you, Bruce. We'll go to the middle. Arthur Lai from Macquarie.
Hi, CD and Window and Jeff. Arthur Lai from Macquarie. So first of all, congrats on the strong growth margin. Just have a very quick follow-up on the US and JP extension, as this is important. My client keep chasing me. So do you have operational strategy to mitigate the cost gap between the overseas fab and Taiwan fab? Yeah, I think CC you hint that you will work on it and the gross margin. But during the Chinese New Year, I read Morris Chang's autobiography, and he mentioned that the strategy is to copy exactly on the Taiwan market data. So I want to understand how we maintain the high yield and also drive the cost down. Thank you.
Okay, so Arthur's question is about our overseas expansion. His question is related to the cost gap and what is our operational strategies to mitigate the cost gap. How are we doing this internally in our fab operations and strategies to do so?
Well, mention my boss is a book. Okay, that's meaning that you really read it. What he says, a copy exactly is whatever Taiwan's improvement, the U.S. will copy over there. Doesn't mean that this year, next year, and the following year will be the same. We continue to improve. That's improve the cost structure, both in Taiwan and in the U.S. And we also try very hard to find out a new methodology or whatever that I cannot share with you right now, but it will give Arizona Fab some benefit. And so that we will improve, we'll minimize the gap between the cost structure between U.S. and Taiwan. And we are working on that. But no matter what I say, we will be the best fab over there. Okay.
Second follow-up question probably is on Windows. You just mentioned that there's a 200 bits or 300 bits margin dilution. Right? So can you give us a one level down that the variable cost and the fixed cost maybe happen or maybe which one is higher?
Okay, so Arthur's second question is on the overseas dilution of 2 to 3%. He is asking if we can provide a further breakdown in terms of how much of that is composed from variable costs, how much of that is from the fixed costs, etc.
Arthur, we really don't give breakdown these numbers, but both of them are higher. That's all I can share with you.
Okay, thank you. We'll move to the right side of the room. I think Rick Shu from Daiwa Securities.
Yeah, hi, Happy New Year, and thank you for taking my question. So the first one, can you share with us your view on this year's global semiconductor revenue forecast as memory, or any driver by application in priority across the main application?
Okay, so Rick's first question, he's asking for our forecast of the semiconductor industry, what we used to provide as semi-XMEM, but of course we have already given Foundry 2.0. Then he would like the outlook by end market application in terms of ranking. Maybe just a comment on the overall end markets as a whole. Right? Yeah.
Rick, I think the memory business will grow this year also. But all I can say is that HBM will grow very fast. And I don't comment on other memories because of, it's not logic.
And we have already provided Foundry 2.0 to grow 10% year over year. That's our industry forecast for 2025.
Just a quick follow-up. Can I use your Foundry 2.0 market growth as a proxy of the global semi-XMEM?
So his question is, can we use Foundry 2.0 as a proxy for semiconductor X memory?
Yes.
Thank you. The second one is very quick. About your CoWoS and SoIC capacity ramp, can you give us more color this year? Because recently there seems to be a lot of market noise. Some add orders, some cut orders. So I would like to see your view on CoWoS ramp.
Okay, so Rick's second question is lots of market rumors here. So he would like to know any comment we can provide on CoWoS ramp in 2025.
Rick, as you said, there's a lot of rumor. That's a rumor, I assure you. We are working very hard to meet the requirement of my customers' demand. So cut the order, that won't happen. Actually continue to increase. So we are, again, I will say that we are working very hard to increase the capacity.
Yeah. Okay, thank you. Okay, let's move back to operator. Is there anyone online?
Yes, we have next one, Robert Sanders, Deutsche Bank. Go ahead, please.
Yeah, hi there. I just have a question on AI demand. Is there a scenario where HBM is more of a constraint on the demand rather than CoWoS, which seems to be the bigger constraint at the moment? And I have a follow-up. Thanks.
Okay, so Rob is asking us to comment on AI demand and HBM status constraint, or what is the bigger constraint in AI demand?
I don't comment on other supplier, but I know that we have a very tight capacity to support the AI demand. I don't want to say I'm the bottleneck. TSMC always working very hard with customer to meet their requirement. That's all I can say.
Do you have a second question?
Yeah, just on SoIC, there's been more discussion in the market around your smartphone customers adopting SoIC. Can you just discuss if there's any kind of inflection point here, whether it's in the PC domain or the smartphone domain, or is this still more of a data center story? Thanks.
Okay, well, Rob's second question is on SoIC adoption. His question, basically in a nutshell, is when do we see an inflection point for smartphone application to adopt SoIC?
Today, SoIC's demand still can focus on AI applications. Okay? For PC or for other area, it's coming, but not right now.
Okay, thank you, Rob. Thank you, CC. I think in the interest of the time, we'll take the last two questions, please. Okay, I guess we'll go to Sunny Lin from UBS.
Good afternoon. Thank you for taking my questions. And so my first question is to try to get a bit more clarity on the cloud growth for 2025. I think longer term, without a doubt, the technology definitely has lots of potential for demand opportunities. But I think if we look at 2025 and 2026, I think there could be increasing uncertainties coming from maybe CSP spending, macro, or even some of the supply chain challenges. And so I understand the management just provided a pretty good guidance for this year for the sales to double. And so if you look at that number, do you think there is still more upside than downside as we go through 2025? Or how should we think about the demand profile for this year and next year?
Okay, well, Sunny's question is about the AI-related demand. We have said that even after tripling, more than tripling last year, it will double again in 2025. She wants to know, is there upside or downside to this? And also for us to provide an outlook on the 2026 AI growth.
Annie, I certainly hope there's an upside, but I hope I can, my team can supply enough capacity to support it. Did that give you enough hint? Okay. And we also forecast, based on the 2024's high number, we also forecast of mid-40s is CAGR for the 5 years. That gives you some kind of estimate that you can calculate.
Yeah, also mid-40% is the long-term expectation in terms of growth by next few years. But how should you think about the trajectory of the growth? For sure, this year is still pretty strong growth, but do you think at some point maybe we see a moderation of growth temporarily and then followed by another ramp?
Well, I think Sunny's question, again, is asking us to comment on 2026 outlook, which is a little bit early, or that, how do we see the trajectory of the growth?
Yeah, we already say it's a little bit too early. All right.
Sure, no problem. So I'll follow up maybe next quarter as well. And so my second question is on Edge AI. And so last year, management did expect maybe 2025 to be the inflection point for us to see more content related to Edge AI. So based on your current visibility, are you seeing clients ramping for this year for the Edge AI products, maybe into second half? And before you also mentioned Edge AI could potentially drive 5 to 10% die size increase. Would that be a one-time increase, or do you think beyond the 5 to 10% increase for the maybe first-gen product, there should be sustainable increase going forward?
Okay, so Sunny's second question is related to Edge AI. She would like some more detail or color. Do we see customers ramping Edge or what we call on-device AI products in second half of this year? And the second part, in terms of the content increase, 5 to 10% increase, is this a one-time thing? Is this an ongoing thing? How do we estimate the content benefit from on-device AI?
Okay. On the edge AI, our observation, we found out that our customers start to put more neural processor inside. And so we estimate it's a 5 to 10% more silicon being used. Can it be every year 5 to 10%? The definite is no, right? So so they will move to next node, the technology migration. That's also to TSMC's advantage. Not only that, I also say that the replacement cycle, I think it will be shortened because of when you have a new toy that with an AI functionality inside, everybody will replace it, replace their smartphone, replace their PCs. And I count that one much more than a mere 5% increase. All right. Did I answer your question?
Yeah, thank you very much.
Okay, thank you. Operator, I think there's one more participant online, so we'll take the last question from online participant, please.
But I think the last caller just dropped the line. Thank you.
Okay, then we'll take the last question from Brad Lin from Bank of America.
Thank you for squeezing me in. So Happy New Year and taking my question. So I would like to ask a few questions. First question would be on the CoWoS as well. So we have observed an increasing margin of advanced packaging. Could you remind us the CoWoS contribution of last year? And do you expect the margin to kind of approach the corporate average or even exceed it after the so-called annual reflection this year? That would be my first question. Thank you.
Okay, so Brad's first question is very specific to CoWoS. Basically, he wants to know what is the revenue contribution from CoWoS last year and what is the margin profile. Maybe we can talk about advanced packaging.
Hey, Brad, we don't break it down in different segments of the advanced packaging. But overall speaking, advanced packaging accounted for over 8% of revenue last year. And it will account for over 10% this year. In terms of gross margins, it is better. It is better than before, but still below the corporate average. Thank you.
Thank you, Wendell. That's very helpful. And then my second question will be on the IDM. So we have seen IDMs increasingly rely on TSMC. And then do we still expect the IDM to support our long-term growth?
Okay, so Brad's second question, I think, is on IDM and IDM outsourcing. He does note that we do see more IDM outsourcing business. So is this part of our long-term growth outlook, Cater?
Again, let me repeat again. They are our very good customers. And we work together. I don't say they rely on TSMC. We are partners. And I really hope that, a long-term relationship will be there for sure.
Okay. Thank you, CC. Thank you, Brad. Thank you, everyone. This concludes our Q&A session. Before we conclude today's conference, please be advised that the replay of the conference will be accessible within 30 minutes from now. The transcript will become available 24 hours from now, and certainly both will be available through TSMC's website at www.tsmc.com. So thank you, everyone, for joining us today, online and in person. We'd like to wish everyone a happy New Year and hope everyone continues to stay well, and hope you'll join us again next quarter. Goodbye, and thank you. Have a good day.
没有，我现在太早起来，就想睡觉。
我也好早起来，我也真的想睡觉，可是今天好精彩哦！他妈他全说嘞。哎，帮我顾一下。
好啊，你要去绑？
对，长官亲自出，没有，长官亲自出，永强哥面前。